I forgot. Put this guy here. Right clicky, left clicky. Hey, welcome to the Closing Beat, everybody. How are we doing today? Happy Tuesday? Yeah, Tuesday. How we doing? All is good. I'm grumpy, man. I'm a little bit grumpy. For whatever reason, I decided I'm going to catch up on the news. And I'm going to watch some of it. I actually turned the TV on, and I went through all the various channels. We don't have cable because we just never turned it on and then found it was no big deal. So it was like the news in New York, Chicago, Miami. I was just flipping around, you know what I mean? Like, to see what's going on and all this stuff. Jeez, why would anybody watch the news? I haven't watched traditional news in at least a year, largely because of being busy with the house, but my goodness, I just woke up grumpy. I'm like, everybody sucks. Anyways, we're going to talk about the stock market here, because how could the stock market make you grumpy? You know what I mean? This is something to do. There's lots moving around. We're going to talk about that here today, and you can see off to the right-hand side of your screen how the stock market did today. We got a turnaround Tuesday. So that's what you got there. All is good. And, you know, really, let me show you that data from the Santa Claus rally. There we go, right in here. So what do we got? 8 days left starting tomorrow, 7 official trading days. Yeah, you could see the, as you go into the last 7 days, it's red because it's not as good a performance as above here. But if you count down the end of the days, I remember I shared this with you, 15 days left, 14 left, and so on and so on. We'll have 7 days left. It's not that it's red as in like negative returns. I was just showing how over the last 50 years, you have smaller and smaller and smaller average gains as you go into the end of the year. That's maybe where we're headed. I don't know. So far, it's not happening. But all of this basically plays out. But right in here where we start to quiet down, I don't know. The stock market just hasn't calmed down just yet. If you take a look at the S&P, it's up 1.83%. That's well above average and also above the 50-day moving average. Omicron is officially the dominant U.S. Variant of the COVID. And so people are like, I don't know, whatever. We don't care. People seem frustrated by it. Stock market seems to not care about it, which maybe plays into people being frustrated and sort of over the virus thing. Because the last 2 days have played out exactly in the opposite way that they should have if it was a really big deal. And so I think people are looking at this optimistically, at least as of now. And that's what the market would say there. Also, one last thing, political-wise, what was it? Because it affects your money. The student loans. The student loan repayments, which almost everybody decided to pause, where your student loans don't have interest and you don't have to make payments thanks to COVID, was supposed to expire in January, and Biden administration or whoever brought it up is looking to extend that. I believe President Biden said that they're going to extend it. The words were that 90% of student loan borrowers still not financially secure enough to pay. And, well, that's frustrating, right? Because then doesn't that mean there's something wrong with how we loan people money to go to college? If 90% of people can't still find themselves in a position to pay, and do we really believe that number? I don't know, man. That's a tough one. So market saw a little bit of a gain. A lot of the finance stocks saw a little bit of a gain on that if they have their hands dabbling in student loans. I showed the action for the S&P. Remember, that starts to slow down. Today you had Disney a little bit higher, 3.3%, and I'm going to actually go sort of do this in kind of a cleaner way today. Let's try something a little different. All right, if we're looking at the S&P here today, semiconductors killed it back up to new highs. You got Micron with the news. They had earnings come out there. You got EXPE, which is Expedia. If the virus is a big deal, you wouldn't expect this to be going higher. Host Hotels, with their reversal from yesterday, continuing in a big way today, up 8%. They're even going into a bit of an acquisition phase there. But Host Hotels shouldn't be doing well if we're worried about the virus. Caesars Resorts should not be. Carnival Cruise, Las Vegas Sands, or just Vegas Sands now. You shouldn't see any of these things doing well. Booking Holdings, good old Norwegian Cruise Lines with their virus cruise, that one's kicking butt. And if you look at the downside in the S&P, what do you have? You've got General Mills. Well, they had earnings. We'll come back to that in a second. You got Kroger pulling back there. Pfizer in the biotech space, that one makes sense. You got Clorox also pulling back a little bit. Moderna, some of these you expect and kind of understand the pullback there. Just kind of crazy the way the market's spread out, and I attribute it to a lot of the lower volume trading, right? Because otherwise, it's hard to make a consistent and also forward-looking decision into the end of the year based on this. Disney, by the way, I got one. I thought of something because it's today. Are you ready, Cody? Help me out. Hey, we got here. Ready? Yeah, I know you're a huge Disney fan.
Big.
It is it's the anniversary of one of their properties, not the parks, but one of their famous movies that came out in 1937. And I wouldn't have guessed 1937, but it is officially the day that this happened back in 1937.
A ride was made?
No, a movie.
A movie was
probably
made?
The most popular movie they have.
Dumbo.
Dumbo?
Is that not? I'm pretty sure that's a Disney.
Well, the most popular movie. Cinderella. And the Seven Dwarfs. Yep. Anyway, so there you go. I hope that brought some joy to your day. Hey, let's look over at crude oil, up 4%. We talked about that yesterday. Said, hey, man, 65 is going to be support. It has shown you that now, not my opinion. And today it gets about a 4% rally. They were actually predicting a decline in oil supplies here. The number, I believe, comes out. Did it come out early? Because Friday's a half day. You had your API data come out today. So stockpile, they're claiming the stockpiles will likely have shown a decline. We'll find out tomorrow. So you got a sharp move in the price of oil. And if you look around, any of the ETFs killed it today. OIH, XOP. I like to look at no, I don't look at USO anymore. We can just delete that sucker. There we go. So you had good movements there. Actually, metals did well today in general. And where is it? I think I don't have it on my list here. Energy. Bring that one up. Yeah, there's the XLE. Wasn't on my list. Up 3% as well. So anything related to oil did quite well there. And sector-wise, I was thinking about this earlier, and I hope I have it. What sectors would be the best in terms of the just total return, right? So if you didn't care about dividends, you just were a total return person and want the most, what do you think, what sectors would be the best if we look back just say 10 years? Probably an easy one. But what if you were somewhere in the middle? You said, I want a nice little dividend. I'm not sure about the market, but I would like the biggest total return possible. What sector do I go for? What if you said, hey, I just want the highest dividend at, wherever I need to go. I'll take the highest dividend or second highest dividend. I don't need the biggest performance. So think about it like that, because I get that question a lot. Where do you think you would go? Turns out I'm able to just plot that for you. Take a look here on the screen, and maybe I can make it bigger somehow. This is probably the best it's going to get, actually, on... Oh, hey, there you go. Not bad. All right, what you're looking at is a real simple scatter plot, right? So if you're... don't let it scare you here. On the bottom, we're looking at the annualized 10-year total returns. So we're looking from X to Y. You've got total returns that could be negative or could be positive. And... Actually, is this zoomed in here? No, we're good. And so the further to the right you go, the higher the annualized total return is over the last 10 years, annualized for each year there. And then the y-axis is the dividend yield. So the higher up you go, the higher the dividend yield. So naturally, you'd want to be as far right and as far up as possible to get the biggest total return with the highest dividend yield. And so we're taking a look here. It's real easy to look. You would initially just say highest total return, slide all the way to the right. What's the last one you have? Tech. XLK is what we used in this case. Second highest total return, XLY, with a lower dividend yield, by the way, which is not much. You can see the dividend yield is negligible overall, but less returns for a lower dividend yield. So if you had to choose between those two, even though volatility would be our next study, you would say, I get a greater total return with a slightly higher dividend as a kicker, right? Over here, I get less return, less dividend, total dividend yield, so why would I bother if I can only pick one? All right, moving over here, you have, so you've got healthcare, right? Greatest total return, then you have financials. A little bit less of a total return, but a higher dividend yield, so that could be a consideration there. You might look all the way off to the left and pick out a few that are obvious consumer staples, and utilities tend to be the more higher dividend paying sectors over history. And then energy just off in no man's land here. Remember, this is a 10-year total return, right? So that's why you have a higher dividend yield, but you don't have very much in terms of total returns. If you looked at only this year, obviously it'd be a different story, but that doesn't really help someone that wants to pick out for individual ideas, going forward when I look at stuff. What else do we have? Oh, I'm trying to play a little housekeeping here. So Medtronic is closed. I would normally stick with it, right? But I'm trying to just lighten the load a little bit and get kind of looking away from the markets as we go into the holidays. So close the $95 puts that I just put on yesterday. 51% of the premium. Also, if you can do that in one day, of course you should probably take it. Southwest Airlines, I had the $40 puts. They did not bounce right away. That one took a little bit of time. Sold that for 24% of the premium. Probably could have held that one, but I was trying to clean up shop. NVIDIA closed the 260 puts for 39% of the total premium there. And the last one was PayPal. I thought about sticking with it, but got 36% of the premium, closed the $175 puts. So all these trades I had mentioned throughout the days as we put them on. The last two that I have are Adobe. Currently have about 9% of the total premium, and Lennar, which I was a day early on that one actually, but Lennar I have about 18, almost 19% of the total premium, and those two I'll be looking to take off before the holidays as long as they keep moving in the right direction. And that would leave me with nothing going into the holiday. So I'd like to point that stuff out for you in case you're having fun following along. 10 new highs, 0 new lows. I really got nothing here. I'm not going to try to make this interesting, but Edwards Lifesciences is the only one that's kind of interesting just because it broke out. Wider range here, maybe. Oh, sorry. Change that. I had your mic on there. So wider range, and you got a fresh breakout to new 52-week highs. Other than that, I put a few on there to look at. Maybe if they pull back, Public Storage is one of them there. Broadcom, which we know has been strong. I don't know that pulls back, but that was one. Cisco is the other. We own it. It was kind of cool to see it move new highs, but it's not an exciting stock. And maybe McKesson. But these are really long shot, if they pull back kind of ideas. Like I said, Edward Lifesciences was the only one that was a clean, sort of crisp move to new highs that you would really keep track of, which is good, right? So the holiday time of year, you don't want to probably keep track of a lot. There you go. All right. Stocks of the news. You got Citrix. You likely saw this on TV, that there's a private equity group and somebody else. Maybe it was 2 private equity groups that are looking to combine their funds and possibly buy them. Is what they were doing there. I was just reading that headline that popped up there. No. Biden vows no return to March 2020 style lockdowns. Uh-oh. You know what that means? It means lockdowns. Oh man. So that's good news. Obviously, that's helpful for the market as well. With that, you got General Mills in the news. They reported earnings, weaker than expected earnings there. They didn't offer guidance that was anything more exciting, so the stock down about 4% there. That kind of sucks. You got not Chevron, CVS. They are limiting the amount of, I guess people are buying COVID tests. I just, because I watched the news the other day. People are buying COVID tests. CVS says you can only buy 6. I believe Walgreens says you can only buy 4. One of them says 4, one of them says 6. It's Walgreens says you can buy 4. I didn't know that was a thing. I also didn't know you had to pay for COVID tests. Don't you just go and they do it? Seems odd. Nike, pulling back. This was the one you were kind of hoping would further extend. We just brought it up yesterday. Starting to roll over. Comes out with earnings. We did not get the gap down. It just all of a sudden gaps up there. Better than expected earnings there. Revenues as expected. They said their supply chain overall should normalize going into their 2023 fiscal year. And so, not going to be anything interesting there. That was my on a watch list. You just got to take it off, move on to other things. And Boeing finally getting a little bit of support, up almost 6% on the day. UPS going to buy 19 freighters, cargo jets, not the big guys, the 767s, I believe it is. 19 767s. Also, you don't see much in the way of buybacks reported here going into the end of the year because the Build Back Better plan is temporarily paused, or it didn't go well for the initial thing there. So they'll probably try again in the coming weeks after the holidays. If you're curious, there's not anything like that going to happen before New Year's. So there you go. There you are. These employees don't have to. Oh boy, I get you guys fired up. What'd I say? Every time I go down, I say something political. All of a sudden, everybody's getting fired up. The student loan one, of course, is something worth talking about because I get a lot of questions about that, whether they should or whether they'll need to start paying their student loans. And I get it. Not everybody is probably in a position or wants to start paying those back, but not 90% of. Not 90%. No, I don't buy that. All right, we'll take some questions if you have any, and kind of blew through. Cody's got a question. Is that true?
Was it Cinderella or Snow White? Because you said Cinderella and the Seven Dwarfs. There was a lot of confusion in the chat, so we just want.
It's Snow White and the Seven Dwarfs.
That's the movie from 1937.
1937. Today is the anniversary.
Okay, so I was wrong.
What'd you say?
I said Cinderella, and then you said Cinderella and the Seven Dwarfs.
Oh.
We were all confused.
I wanted you to win. Sorry.
Appreciate that.
It was better than Dumbo. I guess I got excited.
Yeah.
Dumbo? But Dumbo's probably older, is it not?
That's a movie, right?
Yeah.
By Disney?
Dumbo was a handful of movies. Yeah.
So I wasn't that far off.
Wow. Okay. Merry Christmas. Okay, so what do I have here? The tests. Yeah, the CVS with their limit on 6. And well, I had to get tested went to a concert a couple weeks ago, and they said, just bring us something to show that you don't have the virus. And I went to Walgreens, just actually about a mile down the road, and did a drive-through test through the drive-through there, and I didn't pay $1. They just basically gave me the test, said, okay, we'll text you, let you know. Not only that, they texted and they emailed, which was very helpful. I thought that was good. Do y'all have a Christmas party still having wine and wealth this week? Yeah, we didn't really get around to a Christmas party.
Well, I assume Friday night or Christmas Eve is a Christmas party.
Well, yeah, but to be fair, all of them will be at my house on Christmas Eve, right? So, but we did not have a Christmas party. I'm a bad. Yeah, that's true. I should have thought of something. We didn't even decorate. We have a tree in the front. Yeah, that's right. Yeah, raise your hands. Dumbo, 1941. I would not have guessed that. I would have guessed earlier. Yep. Ashish, Dustin, any stats on when these high range days, 2% range bound? So he's not saying that the day closed up to or down 2%, saying the range between the low of the day and the high of the day being 2%. Do they signal anything forward meaningful about the market performance? And I don't have anything on a range-bound day. Not often I do a range-bound study, but I have a special charts setup that I made a long time ago where I did have that. The trouble with the data that we have is trying to go back and account for if the range was 50% because of a gap, or did we really just gradually move up throughout the day? So is it intraday, or are we going to include the gap? A lot of the larger range days tend to come because of an initial gap and then takes off or whatever. Yeah. Yeah, the super duper guess the Dow is closed. You got your final guess in there for the super duper guess the Dow. That takes you to the end of the year. No, there's not a week to week one because we're doing a big one. Yeah. We're going to call Jan in HR. Tell her we did Christmas party next year. I had to get rid of Karen. Yeah. I had to get rid of Karen. It's Jan now. It's actually Jan from The Office, by the way. She's crazy. Yeah. Good times. Do you agree with Kathy saying that I'll have to bring her over? Kathy's just right downtown. Well, would you bring her over and ask her? Could you get on that? Just see if she'll come by. I have a feeling she looks like nothing like she does on TV. I bet you that's the case. No, I just mean you'd be like, oh, well, the camera, a camera somehow morph people. Not in a bad way, just I feel like she would look different.
You think you look different in person than you do right now?
I do. I look much better right here. Yeah.
That's because you do your hair.
And it was the light. Shave my face. Yep. Anyways, vaccinations are free too. Please get it back. Vaccinations. Well, no, I was saying the test is not free. So even if you have to, like down here, they're pretty loose about everything. But when you go to like a concert or something, or pretty much just, I mean, I don't go out much, but you go to a concert, you still have to prove that you don't have the virus currently. So everybody just goes and gets a test, and that's it. Yep. Karen's fired. Yeah. Jan's up next. We have an on-site testing. You can buy a take-home test. Well, how? Well, that's not part of it. I was just gonna say, how do you know if they, how do we know? What's the truth? Anyways, I'll keep you posted on the student loan thing, because I know that affects a lot of you. I have seen a lot of those emails. I just think it's sort of absurd to delay it a little bit more, and I think it's even more absurd to say 90% of all borrowers still are not financially secure enough to pay. How do we know that? Who is tracking that? There is no way that's being tracked. And even that, no way it gets put on the president's desk. I don't believe it. I'd be one to raise my hand. I have a question about that, please. Where can you point me to that data? Anyways, enough rambling here for the day. Enjoy the rest of your day. If tomorrow's a quiet day, we may just kind of do a little work around here. Maybe I'll come join you in like a raw class here without all the fancy graphics and stuff. But enjoy the rest of your evening, and thanks for coming by.